Stop. Before you click away, answer this honestly. For months ago, when Bitcoin was at $126,000, what were you saying? You were saying, if only Bitcoin could drop below 100,000. If only I could get another chance. I would buy so much. Well, the market just gave you exactly what you asked for. Bitcoin is now at $72,400. That's 42% down from the top. That's not just below 100,000. That's a massive discount. And what are you doing? You're panicking. You're selling. You're convinced it's going to zero. Let me tell you something uncomfortable. You never wanted to buy Bitcoin cheap. You wanted to buy Bitcoin while it was going up. You wanted the comfort of momentum. You wanted the validation of green candles. But here's the truth. Wealth is not built buying what feels safe. Wealth is built buying what feels terrifying when the fundamentals say otherwise. And right now, the fundamentals are screaming one thing. Bitcoin has not gotten worse. It has only gotten cheaper. Before we go further, hit that like button right now. And if you're not subscribed, subscribe and turn on notifications because what I'm about to show you will completely change how you see this market. Now, drop a comment. Are you scared or are you buying? Let's see where you stand. Let's do something radical. Let's ignore the price for 5 minutes and audit Bitcoin like you would audit a company. If you were buying shares in a business, you would look at the fundamentals, right? Revenue, users, security, growth metrics. You wouldn't just look at the stock price and panic. So, let's compare Bitcoin in October 2025 at $126,000 versus Bitcoin today at $72,000. Metric 1, network security. This is measured by hash rate. Hash rate is the total computing power securing the Bitcoin network. The higher the hash rate, the more secure the network. In October, when Bitcoin was at 126,000, the hash rate was strong. Today, it's 72,000. The hash rate is at an all-time high. Let me say that again. Bitcoin is more secure today at 72,000 than it was at 126,000. The miners, the people who secure the network, they have not turned off their machines. They have not capitulated. They are still mining, still securing, still believing in the asset. If Bitcoin was a bad investment, miners would be shutting down. They would be selling their equipment. They would be leaving. But they're not. Hash rate at all-time highs means the foundation of Bitcoin is stronger today than it was 4 months ago. Metric 2, supply dynamics. Where's the Bitcoin? Who owns it? This is measured by exchange reserves and wallet behavior. In October, there was a lot of Bitcoin sitting on exchanges ready to be sold. Today, exchange reserves are at multi-year lows. Bitcoin is being pulled off exchanges and moved into cold storage. Long-term holders are not selling. In fact, while it's holding more than 10 Bitcoin, the so-called whales, they've been accumulating during this entire crash. While retail panics and sells at a loss, smart money is quietly absorbing every Bitcoin that hits the market. The supply available for sale is drying up despite the price falling 42%. The amount of Bitcoin actually for sale is shrinking. What does that tell you? It tells you that people who understand Bitcoin are not scared, they're buying. Metric 3, leverage flush. In October, the market was loaded with leverage, futures contracts, margin positions. Everyone was betting Bitcoin would go higher using borrowed money. That's dangerous. That's unstable. That's a house of cards waiting to collapse. Well, it collapsed. Over the last 4 weeks, $2 billion in leverageable long positions got liquidated, wiped out, gone. And you know what that means? It means the market is clean now. The weak hands, the tourists, the gamblers, they're gone. What's left? Holders, believers, people with conviction. A market without excessive leverage is a healthy market. It's a market ready to go up, not a market about to crash further. So, let me ask you, if the network is more secure, if smart money is accumulating, if leverage is flushed, and if supply is tightening, then what exactly got worse? The fundamentals didn't change. The price changed. And price is just perception. Price is just psychology. If you're finding value in this, hit that like button. Make sure you're subscribed with notifications on. This is the analysis you won't get anywhere else. Now let's keep going. Let me give you an analogy. Imagine you go to the supermarket every week. You buy the same cut of steak. It's your favorite. It costs $20. You buy it every week without thinking. One day, you walk into the supermarket and that same steak is now $12, 40% off. Same quality, same supplier. Nothing changed except the price. What do? You load your cart. You buy 3 steaks instead of 1. You call your friends. You tell them about the deal. You don't ask yourself, why is the steak so cheap? Is the meat bad? Is the company going bankrupt? No, you just buy the discount. Now, let's go to the financial markets. Bitcoin was $126,000 4 months ago. Today, it's $72,000. Same asset, same network, same fundamentals, 42% discount. And what does everyone do? They panic. They sell. They convince themselves the asset is broken. They create narratives. Bitcoin is dead. The cycle is over. It's going to 50,000. It's going to zero. Why? Because in financial markets, price dictates narrative. When price goes up, everyone is a genius. The narratives are bullish. Bitcoin is going to 500,000. Institutions are buying. This is the future of money. When price goes down, everyone is a pessimist. The narratives are bearish. It's a Ponzi scheme. It's worthless. I told you so. But here's the difference between the supermarket and the stock market. When you buy steak, you can eat it tonight. You know exactly what you're getting. But when you invest in Bitcoin, you have to wait. You have to endure volatility. You have to survive drawdowns. And that's where most people fail. Because here's the truth. The only people who can handle this volatility are the people who invested money they don't need. Money they can afford to lose. Money they won't touch for years. If you bought Bitcoin with your rent money, you are going to panic. If you bought Bitcoin on margin, borrowed money, credit cards, you should be scared because you're not investing. You're gambling. And gambling with money you need is how you get destroyed. But if you allocated 1%, 5%, 10% of your portfolio to Bitcoin, money you genuinely don't need for the next 3 to 5 years, then this 42% drop, it's just noise. It's just volatility. It's just the price you pay for asymmetric upside. Let me be very clear. I am not telling you to buy Bitcoin. I'm not giving you financial advice. I'm showing you data. I'm showing you fundamentals. What you do with that information is your decision. But whatever you decide, make sure it's with money you can afford to lose. Make sure you can sleep at night. Because if you can't sleep, you're overexposed. And if you're overexposed, you will sell at the bottom. The intelligent investors I know, the people who've built real wealth in this space, they all have one thing in common. They sleep well. Why? Because they're not overleveraged. They're not betting the farm. They allocated responsibly. And now they can afford to be patient. Fear is not just about price. Fear is about position size. If you're terrified right now, ask yourself, did I invest too much? Did I use money I actually need? Because if the answer is yes, then your fear is rational, and you should probably reduce your position to a level where you can sleep. But if you invested responsibly, if this is money you genuinely don't need, then the question becomes, are you reacting to price, or are you analyzing fundamentals? Because those are two very different things. Drop a comment right now. Are you sleeping well or losing sleep? Let's be honest with ourselves. Now, let's talk about the elephant in the room. The S&P 500 just hit 7,000 points, all-time highs. Meanwhile, Bitcoin is at one-year lows. Stocks are ripping. Crypto is bleeding. What's going on? This is what I call a temporary liquidity rotation. Money didn't disappear. Money just moved. Capital flowed out of high-risk assets like crypto and into moderate-risk assets like tech stocks. Why? Because of fear. The narrative around Kevin Warsh becoming Fed chair, the narrative around tighter monetary policy, the narrative around risk-off positioning. Investors got scared, so they moved their money from Bitcoin to stocks. But here's what history teaches us. These divergences don't last. They're temporary. They're inefficiencies. And when they close violently. Let me show you what happens when Bitcoin and the S&P diverge like this. In 2020, during the COVID crash, stocks recovered quickly while Bitcoin lagged. Everyone thought Bitcoin was done. Then Bitcoin went from 10,000 to 69,000 in 18 months, while stocks only doubled. In 2016, stocks were making new highs while Bitcoin was consolidating around $600. Everyone thought Bitcoin was irrelevant. Then Bitcoin went from 600 to 20,000 in 18 months. The pattern is always the same. Bitcoin lags during fear. Then Bitcoin explodes during the recovery. Why? Because Bitcoin is a leveraged bet on liquidity and risk appetite. When risk appetite returns, Bitcoin doesn't just catch up, it overshoots. Right now, Bitcoin is a compressed spring. The S&P is at 7,000. Bitcoin is at 72,000, down 42% from its high. This gap cannot persist. Either stocks crash down to meet Bitcoin, or Bitcoin rallies up to meet stocks. And given that the economy is expanding, the PMI just crossed 50, corporate earnings are strong, and liquidity is still abundant. Which scenario is more likely? I'll let you decide. Now, does this mean you should go all in on Bitcoin right now? Absolutely not. Does this mean Bitcoin can't go lower? No. We could absolutely test 68,000, 65,000, maybe even 60,000. Markets overshoot. They always do. What I'm showing you is pattern. I'm showing you probability. I'm showing you what historically has happened when these conditions align. But probability is not certainty, and past performance doesn't guarantee future results. So, if you're watching this and thinking, okay, I should buy Bitcoin, let me stop you right there. The question is not should you buy. The question is, can you afford to buy? Can you afford to hold if it drops another 20%? Can you afford to wait 6 months, 12 months, maybe longer for this thesis to play out? Because if you can't, then it doesn't matter how bullish the fundamentals are. It doesn't matter how compelling the pattern is. If you're using money you need, if you're over-leveraged, if you can't handle more downside, then you shouldn't touch this market. Investing is not about being right. It's about being right and being able to stay in the game long enough for your thesis to play out. And you can only stay in the game if you're investing money you don't need. One more time. If you're getting value from this analysis, smash that like button. Subscribe if you haven't. Turn on notifications and drop a comment. Can you afford to wait, or are you overexposed? Honesty matters. Let me show you one more piece of data that will give you perspective. It's called the MVRVZ score. Don't worry about the name. Just understand what it measures. The MVRVZ score compares Bitcoin's market price to its fair value based on on-chain data. When the score is high, Bitcoin is overvalued. Euphoria, bubble territory. That's when smart money sells. When the score is low, Bitcoin is undervalued. Capitulation, blood in the streets. That's when smart money accumulates. In October 2025, when Bitcoin was at 126,000, the MVRVZ score was elevated. Not extreme, but elevated. The market was heated. Risk was high. That was not the time to go Allen. Today, at 72,000, the MVRVZ score has reset. It's back in the accumulation zone. The zone where historically over multiple cycles, Bitcoin has formed bottoms and started new rallies. What does this tell you? It tells you that Bitcoin was overpriced at 126,000 and is now fairly priced or even underpriced at 72,000 based on historical on-chain metrics. But here's the critical part. This is not a prediction. This is not a guarantee. This is just data. Historical data that shows us where we are in the cycle relative to past cycles. Could Bitcoin drop to 60,000 and make the MVRV even more attractive? Absolutely. Could we chop sideways for 6 months before any rally happens? Yes. Could I be completely wrong and Bitcoin never recovers? It's possible, though the data suggests otherwise. The point is this. If you're going to participate in this market, you need to understand the metrics. You need to understand the data, not so you can time the perfect bottom, but so you can make informed decisions instead of emotional decisions. And informed decisions start with one simple question. How much can I afford to allocate to a high-risk, high-volatility asset like Bitcoin without losing sleep? For some people, that's 1% of their portfolio. For others, it's 5%. For some, it's 0. That's perfectly fine. There's no shame in saying, this is too volatile for me. I'd rather invest in something stable. But whatever you decide, make sure it's based on your risk tolerance, your financial situation, your time horizon, not based on what some YouTuber tells you, not based on what your friend did, not based on FOMO or fear. Before we wrap up, make sure that like button is smashed. Make sure you're subscribed and drop one more comment. What percentage of your portfolio is in Bitcoin? Let's see where everyone stands. No judgment, just data. Let me bring this home. Bitcoin is at $72,400. It's down 42% from 126,000. The market is bleeding. Fear is at extreme levels. Everyone is scared. And you know what? Being scared is completely rational. This is scary. Watching your investment drop 42% is painful. It's stressful. It tests your conviction. It makes you question everything. But here's the difference between productive fear and destructive fear. Productive fear makes you ask, am I overexposed? Destructive fear makes you ask, is Bitcoin dead? One is a question about your position. The other is a question about the asset. And those are very different questions. If you're scared because you invested too much, because you used rent money, because you're leveraged, because you can't afford to lose what you put in, then your fear is valid and you should act on it. Reduce your position. Get to a place where you can sleep at night. There's no shame in that. That's responsible risk management. But if you invested money you genuinely don't need, money you can afford to lose, money you won't touch for years, then ask yourself, what exactly am I scared of? Am I scared because the asset is broken? Or am I scared because the price is volatile? Because if it's the price, then you're reacting to noise. And noise is just part of the game. The hash rate is at all-time highs. Long-term holders are accumulating. Exchange reserves are at multi-year lows. Leverage has been flushed. The MVRV ZOR is in accumulation territory. The network fundamentals are solid. The asset hasn't broken. The price has just done what Bitcoin prices always do. Swing violently. Up 40% in a month, down 40% in another month. That's Bitcoin. That's the nature of the asset. And if you can't handle that volatility, then Bitcoin is not for you. And that's okay. But if you can handle it, if you're properly positioned, if you're investing responsibly, then this is not the time to panic. This is the time to zoom out, to think long-term, to remember why you bought Bitcoin in the first place. Let me be very clear about what I'm not saying. I am not telling you to buy Bitcoin. I'm not telling you to hold Bitcoin. I'm not giving you financial advice. I don't know your financial situation. I don't know your risk tolerance. I don't know your time horizon. What I am doing is showing you the data, the fundamentals, the on-chain metrics, the historical patterns, and asking you to separate emotion from analysis, to separate fear from logic, to make decisions based on your situation, not based on what the market is making you feel. Because here's the reality. 6 months from now, you will look back at this moment. You will see Bitcoin at 72,000 on the chart, and you will have one of 3 reactions. 1, I'm glad I sold and cut my losses because I was overexposed and needed that money. 2, I'm glad I held because I invested responsibly and the fundamentals were sound. 3, I wish I had bought more because the data was screaming opportunity and I let fear win. Which one of those will you be? Only you can answer that. But whatever you choose, make sure it's based on rational analysis of your financial situation, not based on panic or FOMO. So, here's my final challenge to you. Build conviction through education. Study the fundamentals. Understand the metrics. Know what you own and why you own it. Because conviction built on knowledge allows you to act when everyone else is frozen. Conviction allows you to sleep at night, even when the price is dropping. Conviction separates investors from gamblers. But conviction without proper position sizing is recklessness. So before you do anything, ask yourself, can I afford to lose this? Can I afford to wait years for this thesis to play out? Can I sleep at night with this allocation? If the answer is yes, then you have clarity. If the answer is no, then you have work to do. Final call to action. If this video gave you a new perspective, hit that like button right now. If you're not subscribed, subscribe and turn on notifications because we're going to continue analyzing this market with data, not emotion. And drop one final comment. Conviction or panic? Let me know where you stand. Bitcoin bleeds at 72,000. You are scared, but maybe you're scared of the wrong thing. Maybe you should be scared of being overexposed, not scared of the asset itself. Study the data, manage your risk, invest what you can afford to lose, and let the fundamentals guide you, not the price. Thanks for watching. I'll see you in the next one.